Happy New Year as my hair lost weight for the new year. And we have your jobs, your AI, and we're going to talk some Fed and the markets just to close off this year. Also, my hair will grow back in like 2 days. Don't worry. And why AI might stamp out inflation but endanger the job market. Well, think about it this way. You have a business in California, minimum wage, what is it, $21? If you just replace them with AI robots, very low cost. Coming in from Reddit, you have the pre-market news report. Jobless claims 199,000 in December on the 27th. So you guys are going unemployed, but you won't believe this. It won't show in the 4-week moving average of initial claims on FRET because what's said will always be revised later on, like the next job report. I forget when they do revisions, but they'll just revise it later on. So right now they'll give you like a nice small number, and then they'll go revise it, and it'll be a nice big number. And you'll be like, oh, I didn't know that, because they can cook some books. It's great. And FOMC summary of economic projections. So the Fed, they want to cut a little bit in 2026, 2027. I'm going to say they don't know yet, but main focus is the cuts in 2026 to try to get those rates lower. Let's go look at the chart. So here's your 2-year yield. If you guys are new, this is what the Fed follows. The Fed is this giant orange line heading down. They just follow whatever the 2-year yield is doing. Right now, we're in this giant pattern. I'm thinking it may break upward to the upside. There's reasons for that, but we don't know yet. There's no confirmation of anything. It's still bouncing inside of this pattern. If it does break out before the 29th, when the Fed is supposed to announce the FOMC news, and it breaks to the upside, we might get a hike, but we don't know anything yet because nothing has happened yet. When economic and event calendar in Asia, Wednesday, December 31st, 2025. China's PMIs for December. So as of recording this video, the news hasn't come out yet. You can see the expected numbers and then the prior numbers. I'm thinking they don't have jobs over there or that many jobs going on just because we don't have money moving around in this system. If you guys are like, Gordo, what are you talking about? What do you mean we don't have money moving around? Go watch my other videos. There's like, as of recording, 14, and I just break it down for you all over the place. It's just like little cookies. But let's keep going. And Iran replaces central bank governor in effort to contain cost of living protests. It most likely won't do anything. It's just the money. There's no money moving around. You have your banks. You have your money. You have banks lending it to each other. We know that from prior videos. We're not lending to each other, especially in Monday's video. We saw an article saying our banks tapped into the Fed already. Just think about other banks worldwide. They're not doing good. So it's not that I'm saying it has to be that way. I'm just saying most likely this is not going to change anything. Turkey's Ziraat Bank CEO flags prolonged tight policy as key 2026 risk. They're tightening now. The banks are tightening. If you guys want to see more, go watch the video that's going to be posted on Friday. It will break this down. When tightening happens, what usually happens historically. This is a big red flag. And starting to finish off, you have gold and silver price prediction. Where are gold and silver headed in 2026? I don't really care what the article is saying here. We're going to go look at the chart. Now, before we jump into the gold and silver charts and some big market charts, I want to show you the 10-year yield. We're doing something really, really bad right now, and you better hope I'm wrong. So, you guys are in a pattern, descending. You guys have a measured move. This one you can measure inside of the pattern or it can be measured on the outside. Usually these flag things don't play out too often, so I'm just going to say if we get a confirmed breakout, we'll go up and hit the 200-day moving average. Most likely get rejected, but if we break through it, more inflation. And the 10-year yield, if you guys don't know, that's your interest rates for your loans. Also, your inflation. See how everything's kind of just like intermingled together? It's just like, oh, if that happens over there, it's probably going to affect that too. The more you watch this channel, the more you'll see it. But main focus is right now, as of today, the 10-year yield looks like it's breaking up out of this pattern. No bueno. Also, you have 36 minutes and 43, 42, 41 seconds left before this candle closes. It can still just go down and just have a wick sticking out like what this one did. But time will tell. I got your silver on the line here. You have your pattern here. I said if you break up out, you will most likely go higher. I was right. And then I also said you'll most likely hit this price target right here. I was wrong. It went past it. It tends to do that in my predictions. But you have your silver going up, and there's something else to show you guys too. Here's your new pattern on silver. I didn't just draw it out earlier because I wanted you to see the previous pattern to see how it played out. This is your current pattern, the one that silver's currently playing off of. Could you have called the top until there? So what day was this? Monday? You could have called the top on Monday. That's all you needed to know. Here, you broke down. Most likely head lower. You are above that giant moving average though, which if you guys don't know, your support to the upside. Cool. I'm thinking though, this pullback on silver is going to be short and sweet. How far will it go down? I'm not sure. I can give you a price target. It most likely won't hit it though because we have more influence to the upside right now. Which will be, if you measure from here to here, move it on over. Silver will most likely hit $77.30. That's my prediction. It's not set in stone, and we're above the 200-day moving average. I'm not betting all my money on it going that far. Here's your gold. I said same pattern, descending triangle. You broke up out of it, most likely to go up. I put a price target here. It went higher than the price target for like 3 days, and then came crashing down. That's all. New pattern on gold. Here's your new pattern on gold, freshly updated just for you. It's going up in a channel. Most likely they break down. Guess what? Broke down. We don't have any confirmation. I like when it comes up in retest. Although if you check this oscillator, it's like, Gordo, you're going down. I'm just like, okay. You're above the 200-day moving average just like silver. Am I expecting a giant pullback on this one? Not really. You can expect a target of 379.51 cents. Will it hit there? I doubt it. Just because we're above the giant moving average. But if you guys keep following the channel, you guys will see exactly how this plays out. I just leave these drawings here for you guys. On to the big markets now. Here's your S&P 500. Big triangle pattern going up. Do we know where it's going to go yet? No. But Gordo, it's going down right now. Cool. It hasn't broken any of my lines here, so I don't know where it's going. It's just standing in the pattern. So we're going to go to Qs now. Here's your Qs. Very similar pattern. It's just flat compared to the S&P 500. This one, same thing. It got rejected here off the top. It's going down now. But it hasn't broken out of the pattern, so we don't know where you're going to go. It's just time will tell on this one. And finally, for your Dow Jones Industrial Average, you have trend line going up. But guess what? You broke it. So you broke down. Check your oscillator. It's down. Where's the 200? It's right there. I'm thinking small pullback, not a giant, massive one. This is a head and shoulders pattern right here that it created. Let me draw it out for you. Here's your head and shoulders pattern. Let me get you a price target. You measure from there to there, and then you move it on over where it broke, and most likely you'll go down and hit 474.59. Most likely. But remember, you're above that giant 200-day moving average, so I doubt it. And that is everything. If you enjoy watching this, please make sure to subscribe, like, maybe send this video to a friend if you think they would enjoy it. Or if you're one of those friends that just spams your friends with random videos, you could do that too. I don't mind. And I will see you guys Friday.